Hello, everyone. Hope you're having a great day. This is a video about the loan estimate form. But before we get into that, please make sure to subscribe to this channel or like this channel or put your comments in the comments below. Feel free anytime. Again, the loan estimate form is a form that was created in 2015 by the Consumer Finance Protection Bureau, CFPB. It replaces the old good faith estimate. It replaces the old truth in lending initial statement. And it's meant to be a document that lenders create to give to consumers that consumers can use to compare offers from different lenders. It really hasn't turned into that. There's some penalties lenders receive, or we end up having to eat some fees if we don't do this correctly. And we don't like to create these because of that. And a lot of lenders have internal restrictions on when a loan estimate can be sent and when it can't out of our system. So lenders have created kind of different documents to present offers to consumers. Most of the time accurate, but they're in different formats. So if you can get your hands on some comparative LEs, then more power to you as a consumer. And that's what the purpose of this document is for. And it's meant to give you a clear picture of your transaction before you enter into the transaction. It's like a sticker on a car. You want to know what the car costs before you agree to buy it. Okay, let's get into a little bit of the details of the LE. So I've got my screen formatted here so my subtitles can go below. Okay, so let's start up here. At the top, there's usually 3 pages to an LE. Sometimes there's 4. The basic stuff at the top. What's the sales price, the date, the loan amount, the interest rate. Look at that, smoking low interest rate. In this case, this is a conventional loan. Yes, the rate is locked. Come down here to the payment information. A couple questions. These both need to be no. Is there a prepayment penalty on the loan? Answer should be no. And is there a balloon payment? Answer should be no. Here's the principal and interest payment again, and then here's an estimate of escrow for insurance and tax. Remember, we're on the front end of this transaction, so we are guessing at a couple numbers there. And then is there an escrow account for insurance and tax? So early on, we're saying, yes, there is an escrow account. Borrower can probably, in this case, could change their mind, certainly. And on the closing disclosure at the end, it might show different. But right now, we're showing there is an escrow account. Then a couple summary numbers, closing costs. So this is the closing cost number, a huge number. Closing costs used to be broken out from prepaid items on the old GFE. So you'd have costs, which are things like appraisal, credit report, lender fees, attorney, survey, stuff like that. And prepaid items, which is the interest on the loan between the date the loan closes and the first of the next month. Also prepaid insurance, prepaid tax for setting up the escrow. So those used to be 2 separate numbers. For this situation, they get lumped together and your eyes pop. Also, the way we disclose things, not all lenders do, but the way we disclose things is we want to show all potential borrower costs on the borrower side. So even though we know that the seller is going to pay for some of these, we show them on the buyer side, sort of as a worst case, to avoid those penalties if we do things incorrectly. And then here's the cash to close number, in this case $92,000, which is the down payment plus the closing costs. Page 2. So read this like a paperback novel. You go down on the left side and then come back up to the top right side and down on the right side. Also within these categories, A, B, C, etc., the numbers add up. So in this case, for little box A here, 800 plus 95, 995 equals 1795. I think initially you want to have that total number, subtotal number below, but it's above. A little bit of reverse thinking there. Thank you, CFPB. Services you cannot shop for are broken out here. So this is stuff that the lender picks that we will charge you for. Credit report, inspection, flood cert fee, tax service, stuff like that. Then there is a section that the consumer can shop for, mostly property survey. You could shop for your home, whoever you want to do the survey, and title policy. Most contracts, however, have a title company selected. The time for a borrower to choose the title company is when they're writing the contract. And usually since the seller pays more of the title fees, the seller picks the title company. So there you go. There's a little subtotal here, and then we go up on the right side of page 2. There's another little government fees for recording the documents at the courthouse. Then we finally get this word prepaids way down here in F. Prepaid insurance. So you're buying a homeowner's policy for the next 12 months, and then there's that interim interest between the date the loan funds and the first of the next month. And then here we are setting up the escrow account. 3 months of insurance, 3 months of taxes in this case. And there's an optional owner's title policy. I'm going to make a whole nother video on title quotes in Texas. They're just amazing how we're supposed to quote these things. They make no sense. But this is how we present it. And then there's a subtotal, and then there's that $12,000 cost number that you saw on page 1. And then here's calculating cash to close, not too difficult. There's the cost, there's the down payment, there's the total. We know that the borrower's paid some earnest money, but we haven't verified it, so we don't show it here. We don't show the seller credits or the items that the seller is going to cover, like this big lender's title policy number will be a much smaller number at closing. And there is the end of page 2. And then coming down here to page 3, this is where the CFPB wanted consumers to use this little box here to compare offers. So the three metrics is the first one is what's the loan look like in 5 years? How much principal, interest, mortgage insurance, and loan costs have you paid? In this case, 85 grand. And then how much of the loan balance have you paid down in 5 years? So 36.8 grand. So those are two numbers you can use to compare offers. The APR, which was from the Truth in Lending Disclosure initially pre-2015, there it is. Again, it's a number that is meant to give the consumer one number to compare lenders' offers, which would be great if all lenders included the costs in that calculation equally. Some lenders do, some lenders don't, so you can have confusion in accuracy of APRs, but there's ours. And a new metric, total interest percentage, TIP, which can be a scary number. It's the percent of the original loan balance that you will pay over the life of the loan in interest. So that is, in this case, 47%. Okay, then these other little considerations. Are we ordering appraisal? Is the loan assumable? Do you need insurance? What's the payment if you make your payment late? No one ever cares about that because everyone's going to make their payment on time. What are the chances of refinancing, or can you refinance this loan? And then servicing. Who's going to service the loan? Is it going to be serviced by us, or is it going to be serviced by somebody else? That means, are we going to sell the loan? In this case, we service our own loans, so we will service the loan. And that is the information about the loan estimate. If I could answer any questions for you, please reach out. But again, it's meant to be a comparison document for consumers to use to compare offers, but really it's turned into just kind of an accuracy disclosure document that is sent with the initial loan package to the consumer once they have applied for the loan. If things change that were unseen by the lender, we can issue a change of circumstance document to cover our whatever we missed. But in most cases, lenders take these loan estimates seriously and want to stay within compliance rules. That's it. Hope you have a great day. If you have any questions, let me know. And feel free to share and like and all those social media things. Have a great day.